Hey guys, we're back with another episode of Real Talk with Joe and Cody. I'm Joe, and there's Cody. What's
Here
going
I
on?
am. Look at us, both wearing our black shirts today.
I know it's like that neutral. It's neutral. It's TV friendly,
It
camera
is.
friendly.
Yes.
Takes off a couple pounds.
No offensive decals. Yeah, right. Which is
It's
needed.
slimming. It's slimming.
Oh,
We just need to wear
man.
is it the vertical stripes? Is that slimming versus
Yes.
horizontal? Yes.
Yeah.
Yeah. So next
I
time I'll wear the vertical stripes.
yeah, there we go.
Just
And I'll wear horizontal. We'll see which one's
see the
better.
difference.
Yeah.
See who the fatty is then.
Right. Well, I sure feel like that, so it could be me.
I've got to get into the beach bod, so I've been pretty good. We've got
Good.
a trip coming up to Hawaii, so I
Oh, so yeah.
gotta at least fake it that I live a healthy life,
Right. Yeah. The
AI
crash
nowadays
diet.
though, I could literally just take a picture and just AI it,
That's true.
with the six
Yeah.
pack abs and stuff.
Right.
So couldn't
If
do
only
that
you could
back in the
just do it in
day.
real
It was
life.
just who we are. It's just
Yeah.
like
Right.
you get the picture that you get. Now we can
Oh,
do whatever
it's
we want with it.
it's sad.
Yeah. Anyways, so yeah, what's going on in the real estate market? Well, not only what's the rates, but I kind of was curious, just kind of what you're seeing in the end with your clients. What general rate are they getting? I know you can't say it, but just
Yeah.
what general rate are you seeing your buyers get on this current market with rate
You
buy
know,
downs or whatever they do?
yeah, I would say overall it's probably anywhere from 5.5 to 6.25.
Okay.
Because most people right now seem to be buying it down some. Not necessarily a lot, but just, that extra 0.25% could be enough for them. Getting a lot more seller credit as of, I don't know, last year or so.
Yeah.
So using some of that seller credit to buy down. But like FHA and VA, like the government rates are lower. So we tend to see those right now, like in the fives, in the high fives.
Okay.
And then conventional is kind of in that low six range. So starting to see a little bit less of a bigger buy down where people were wanting to buy it down more. When it was in the sevens, people are trying to buy it down into the low sixes. Now that we're there, we're still seeing them bought down, but just less of. So I'd say anything from 5.5 to 6.25 is kind of where we're seeing a lot of stuff right now.
But why do you see, like, why are they just not continuing to try to buy it aggressively again? Are they just wanting the cash at the end of the day, or are they like
I
what's their
it
reasoning for not saying, well, we're at six, but why don't we get down to high fours? Like
Yeah,
buy it down to that, you
um,
know?
I think a lot of it is just payment related,
Okay.
where they're not feeling the need to
So
buy
as
it
long as it
down.
works for them, yeah.
Yeah, exactly. That extra little buy down is like, okay, cool. That knocks off $100 a
Okay.
month, as opposed to needing to take a larger buy down to get to where, that 2,800 a month or 3,200 a month, whatever their number is.
Okay.
That buy down just seems to be a little bit less. And I think there's becoming more of a um, concern in a good way of, do I really want to buy the rate down that much more now when rates seem to be going down, and we feel like we're getting into an environment where maybe we're not going to jump back up into the 7.5 out of nowhere. Maybe things are kind of heading that way. So do I really want to dump a bunch of money into buying the rate down when in a year or even 6 months or whatever that time frame looks like, maybe we've already gained another 0.5%, and
Okay.
all that money that I just spent to buy it down, now I could essentially refinance there for no cost. So
So if you see rates on a trend to go down, that's kind of generally what you advise, because that upfront cost to buy it down initially is more than what it would be to refinance down the road.
yeah,
Okay.
yeah. And I'll usually just break it down because I try not to persuade people to do what I would do. I'll just give them the numbers and
Yeah, but
say,
they need
here.
your expertise, Cody.
They do.
Okay.
But then
They
if I'm
need your
wrong,
wisdom.
which I'm wrong daily, then
Just
it's
blame
my
it on
fault.
something
So
else. Just like
yeah.
it's out of my hands.
Yeah. So usually I'll just do a breakdown of, here's how much it would cost to get that rate, and here's how much it would save you.
Okay.
Here's how long it would take to recoup that investment.
Okay.
So that usually it'll pump the brakes for a lot of people, because initially you're like, oh yeah, I want that rate or I want that payment. But then you see it's going to cost you, you know, $8,000 to get there, and it's saving you $250 a month. You're like, all right, well, that's going to take me,
That much to get it.
4 years to recoup that. Is it going to be, do I think that I would be refinancing within 4 years? Is there a potential of that? So it kind of just puts it out into perspective a little bit more when you start to break down the numbers. Um,
Okay,
which
so would
which
you
tends to
advise? Sorry, I
slow the buy
not have
down.
interrupted. My
No,
mother
you're
has
good.
not taught me well enough to not interrupt people. Um,
It's all good.
the question I had though was, so does that change? Do you change your tune with the buyer when the closing costs can be paid by the seller? Um, I guess it
Yeah.
doesn't. Yeah, I guess you keep more money in your pocket if you don't do it, but if the seller is saying, "Hey, I'll buy down your rate to whatever," give you $15,000 in closing cost credit to buy it down, do you advise them differently, or is that still like, "Hey, let's get it lower, but then keep the rest to do something else," or
Yeah.
what do you advise generally in that situation?
It's similar. I will usually show them like, okay, if we use the seller credit to pay off or pay all your closing costs, and now we're left over with say $5,000. Here's what it would look like to buy the
Okay.
rate down because since they can't keep it in their
They
pocket,
can't, yeah, it's not in their
um,
pocket, but
so it's kind of like we have to use all this money.
yeah,
And so it'll be usually a rate buy down, or maybe if they're putting down less than 20%, it's looking at what it would take to buy out the mortgage insurance, which one makes more
okay,
sense to use, how much if you've got $5,000 and you can use that to buy the rate down, that might save you $75 a month. But if we buy
okay,
out the mortgage insurance with that and it saves you 150 a month, it's essentially the same concept, just different product option,
yeah,
right?
okay,
So it's just figuring out. So it does change a little bit because now it's like, okay, now we have money that is not yours that we have to use towards this transaction. So let's figure out the best way that we can use
yeah,
it. But
it's like a gift
um
card,
it is like a gift card.
where are you gonna
Yeah,
spend it?
right. So it's a little bit different than when it is, out of your own pocket, and especially when you look at some people that are wanting to buy it down to like the bottom of the rate sheet, whatever the lowest that they can get, and you really start to break that down. That's where in my head, it starts to make less and less sense to do it. And I've seen it before with people, prior to COVID, and then we see the COVID rates. And granted, those were different, different scenario, but similar case right now because rates are higher than what they could be, right? And we ran
Yeah,
into that with COVID, and people were buying rates down, buying out mortgage insurance, and 6 months later, they're looking at refinancing, going, "Man, I just spent like 8 grand
yeah,
to buy out the mortgage insurance and buy the rate down, and here I am refinancing again, and I'm getting better than what I had then, and I paid 8 grand for it." So those kind of going through some of those experiences from my side, it gives me a little bit more of kind of a cautious approach of like, I just want to make sure you know where you're putting your money and what that's going to look like. Because a lot of people don't realize too that when you buy your rate down, whatever you're doing to that existing mortgage, when you go to refinance, all of that is gone now. Now you're just completely redoing your loan. So if you still don't have 20% equity, you're going to be required to have mortgage insurance. You're going to have to buy it out, your rate, everything. So it's like, make sure that whatever we're doing here, this is kind of a long-term investment, because if it's short term, you're probably going to lose money on whatever you're paying into here.
I see, I see.
Yeah.
Well, cool. Fives for people now, which is like
Fives. Yeah.
really weird to say.
I know.
We've been in the sevens for a long time.
Yeah. Yeah, we're
So,
creeping into the national average yesterday was 6.19, I think it was. So we're creeping into where before we know it, we might be seeing everything in the fives
into
if we get
fives.
lucky. Who knows?
Yeah,
We might jump back up. That's been the trend
for sure.
for the last couple of years now, is we see a good rate market, and then it's just quickly erased within a couple weeks. So
Yeah, and it's just, yeah, we can tell people till we're blue in the face, but it's like, once those rates hit the fives, you're going to see people react positively to that.
hmm
And you're going to see a lot more sellers come in the market. You'll see a lot more buyers come into the market, more importantly, and then you're
yeah.
competing again.
Yep.
What we're seeing right now, anecdotally, is buyers have a say, and this is the time to buy low. Like,
hmm
so,
Yeah.
anyways, you can listen or not listen to us. It's up to you. It's
Yeah.
free advice. Free
Yep.
advice. Normally pay thousands for.
Exactly.
Um, I got a
What are
couple
you seeing?
articles I saw,
Yeah.
um, that baby boomers hold nearly half of U.S. real estate. They own 41% of U.S. real estate, twice that of millennials,
Wow.
reflecting decades of price growth and tougher entry for younger buyers. We're not, are we, we're not, we're millennials, right? Or are we Gen
Uh,
X? Like, I
yeah.
can't. We're
I think I'm a
You're
millennial, I
younger
believe.
than me, but I think I'm right on the
Yeah.
cusp of
Yeah.
millennial.
I
So
think so.
I'm in the loser group. I don't like that.
Yeah.
I don't
Well,
like losing at anything, but it's like being in the loser group of buying homes.
yeah.
But
Start buying more houses, I guess.
I know.
Skew that
Despite
number.
making up less than 20% of the population, boomers hold about $20 trillion in real estate assets and 51% of the nation's total wealth. Wow.
Wow.
Gen
Really?
X owns about 29%, and millennials hold just over 20. Gen X is beating us too.
Wow.
Um, and real estate represents 22% of boomers' total net worth compared to 40% for millennials who rely more heavily on property as a share of their overall assets. So, yeah,
Hmm.
anyways, along
What
that
do
note,
you?
I heard, I saw another article from Fortune magazine that Corcoran Group CEO from New York basically tells boomers to, uh, or tells Gen Z and millennials to stop buying Starbucks coffee and save up for a house.
I
It
mean,
sounds like a New York article, like this tough CEO is like, basically, "Get over it." She's like, "It's been no more extraordinary, these markets and today's struggles." You know, everyone says, "Oh, look at what it costs to buy a house back then," and
right.
my house cost $30,000 in 1950, and,
Huh.
blah, blah, blah. She's been in the industry, I think, how long has she been in the industry? 40 years in real estate, and
Okay.
she's like, "Look, the struggle today is not any worse or any better than the struggles that people have had the entire time she's been in the market." So I kinda
Yeah.
trust, and
Yeah.
basically says, what else does she say? She says it's tough, but
Mm-hmm.
stop spending money on stupid things if you wanna buy a home. Like, save up your money, and you'll realize sooner than later how much that adds up. I guess, like, in New York, at least, she's saying this thing is popular. I don't know if you've heard of it. It's, okay, where is it? Where is it? It says something about 3 nights a week, stop buying Starbucks, stop spending on money the things unnecessary, dinner clubs. That's what I was
Hmm.
looking. She
Dinner
said
clubs.
she basically, you get together with groups that are like, "Hey, you're on Wednesday, 3 nights a week, you're going to some person's house, they're making dinner, like, for everyone."
Oh,
So it
okay.
kinda saves money pooling, "Hey, this person
Yeah.
takes their dinner on Wednesday, this person on Thursday, blah, blah." I've never heard of a dinner club,
Interesting.
but I'm
Yeah.
on the older end of the millennials, so maybe
Yes.
that's
Me
a
too.
thing. Maybe someone will correct me in the chats here to say, "Yes, that's a normal thing," but
Right.
I don't
I've
do the dinner clubs.
I've never heard of it.
Yeah, and maybe it's a New York thing. This is a New York article,
Yeah.
and
Maybe
she's
so.
talking about New York, so anyways, not trying to throw, any shade on millennials, but we're
But we need
we're
to
we're
step it
getting
up.
told. We're getting told by the baby
Yeah.
boomers, we gotta step it up and stop being such sissies about this market, so,
Right. Well, I wonder too how
um,
much of a difference there was just in the upbringing, right? Because I know,
yeah,
a while ago it was that's where you build your wealth is
yeah,
buying a
true,
home and
true.
and put as much down as you can, and then now I don't know. I don't know where people land with it. I think it's still a want, but I don't know if it's the same feeling as it was
Yeah, I
then, where
agree,
it's like
I agree.
that's
I think it
which.
was more that's what built wealth, and that's what that article
Mhm.
was saying, how much wealth is tied up in baby boomers,
And it worked.
assets, but I yeah, the pressure of buying a home, I can tell it myself. There's just not as much pressure
Mhm.
to that's the way to go. But I don't know the other answer. I'd love to hear someone, if you're listening, say what younger generations are thinking is that future of making money,
Mhm.
whether that's stocks, whether that's Bitcoin, whether that's a combination of different things. I'm like, the housing market, yes, isn't as cool and trendy to say that's what you build wealth in. And you hear a lot of naysayers say that oh, housing market used to be the place to, hold your assets and build wealth. But what's the option? What's the other option?
Right.
I don't know it. Maybe I'm too old to know it.
Well, I think when you start to break it down too, if you're just strictly comparing, obviously everybody has to have a home. So if you're just
Yeah.
strictly comparing what your return is on rent versus buying and owning a home,
Yeah.
it's a no-brainer. I mean, I get it that lately we have not rent has been cheaper. So if
Yeah.
you're just looking at it from a standpoint of like what's
Of
my
just money
outgoing
out. Yeah.
monthly,
Yep.
yeah, it totally makes sense month to month to do that. But overall long term, it's like investing in your retirement account. Like we all think, "Oh, I'm not even close to retiring. I'm
Yeah.
24 years
What's
old.
the
Like,
point?
I'll do this when I'm older." And then you get to that point when you're you're 45 and you're going,
Yeah.
man, I haven't done anything. Now I'm behind. If you bought a house and you can afford to do it, you're going to gain equity. I mean,
Yeah, I'm
it's been
curious, like,
slower
we're
than
sounding
what we've
super
been.
old.
Well, we're
We
millennials.
yeah, we're sounding super old right now, and anyone
Yes.
that is a millennial, but I wonder, it'd be interesting to see kind of what is their long-term. I think the younger generation now is living the moment more than. I think there's a balance because I think our parents and our parents, grandparents were like, we're planning for when we're 60. That's when we're going to enjoy
Hmm.
life. 60,
Right.
65. The millennials now are like, I'm going to enjoy life at 20, 30. Who cares what happens in
Sure.
60, like when I'm 60? I think there's a balance there, but I wonder if that younger generation is kind of more living in the now and
Could
thinking,
be
look,
for
I can
sure.
rent, not have to stress about anything. I can travel, I can do whatever I want. But
Hmm.
just remember, 60 comes and kicks you right in the pants real quick.
Sure does.
You'd be surprised.
Yeah.
I'm already like having my midlife crisis every other day here. Like at 40, I think I'm 43, and you start to lose count. That's how bad it is.
Yes.
Start to
That's
lose
when
count of how
it's
old I am.
right.
I'm just like, I
Yeah.
don't care. Like another another year has gone by. I don't know what age I am.
Yeah.
I'm
What
in
am I
my
doing?
mind and my maturity. I'm about 21, I would say. But
Yeah.
yeah,
That sounds about right though.
yeah. Well,
You're
that
an
was a good
old
talk.
soul.
That was a good talk, man. We just
Absolutely.
knocked the millennials and or knocked the Gen Z. Who is after us? Who's the younger
You
Gen Z?
know,
No, Gen Z
I
is older than us.
I'm not gonna lie, I do
I
not
can't. I
know.
have no clue. I
I
have no like Cora is a generation. I don't even know what they call them. Like she said what she is.
yeah,
She's 8 years old. I'm like I've never even heard of that in my life. So yeah,
I have
no
no
idea.
clue. I know that
Anyways,
I'm a millennial because it's been talked about for so long that I just know that that's the category that I fall into, but outside of that, I'm like,
I know. I
I
think
don't know
the only way I know it is that it's um I'm right on the cusp. Everyone's like, no, you're
uh-huh.
this, and I'm like, no, I'm a millennial. Though you may think I'm old, I'm in your
Yes.
category.
Believe it
Like
or not.
I'm on the other side of that, right on the cusp of it. So
Can you
I'm
imagine the difference between a millennial of your age versus the youngest version of
I
a
know.
millennial, how
It's
different they
different.
would be?
It is. It is different. So, whatever.
Wild.
Buy houses.
That's right.
We're not biased at all. Buy
No.
houses.
But I think that we are biased because we do own homes.
We want the
So
best for the generation.
we've seen the return.
It's like your parents say, we want the best for you. It's why we do
Yeah.
it. Why we
Yeah, I
encourage
want
you
you
to
to
do
have
that.
better things than I did.
Don't wait till you're 65 to
Yes.
spend all your money. Spend it
Yeah,
all on
let's just hope
houses
we
right
get to
now.
65.
I know. You never know. You never
Yeah.
know.
Yep.
But okay, my man. Well, until next week, we'll
Okay.
chat with you later.
Sounds good. See
See
ya.
ya.